we're going to see some of history repeat, or at least rhyme, with like the 2008 market crash. But there's going to be some differences here. Hi, this is Mike Maloney. I just wanted to make a few quick comments on the market crash that's been happening. Anybody that has been following me over the past year or so knows that I've been getting increasingly bearish on the stock markets and presenting a lot of data going back to about November of last year of how we were getting set up for the next crash. On my Wealth Cycles website, and all of my insiders at goldsilver.com have seen an overwhelming amount of evidence building that the stock markets have to correct. However, I don't think that this plunge is it. I think what you're seeing is, we had a lot of selling on Thursday and then accelerated selling on Friday. And the novice investors, the people that that don't check their accounts all the time, they come home on the weekend, they hear on the news they've been hearing during the week that the markets are crashing and so on, and then they look at their accounts on the weekend, and on Monday morning they call their broker and they tell them to sell. So we've had a big down day with a bunch of capitulation. However, there's more going on than just that. There's several factors. We've got market forces. We've got market traders, the regular dynamics of the market that cause things like the markets to move in Fibonacci retracements and support and resistance lines and such. Those are traders that are looking at charts that cause all of that. We've got mass psychology. And then we have the plunge protection team, which is otherwise known as the working group, the President's Working Group on Financial Markets. And this was created by Ronald Reagan after the 1987 stock market crash. It's a very secretive team made up by the Secretary of the Treasury, who is also the chairperson of the plunge protection team, and his name is Jack Lew. And the chairperson of the Federal Reserve, which is Janet Yellen, the chairperson of the Securities and Exchange Commission, the SEC, who is Mary Jo White, and the chairperson of the Commodities and Futures Trading Commission, the CFTC, Timothy Massad. And my guess is that since Friday, they've been having conference calls and meetings trying to figure out what to do. And they've got some very, very, these people have access to some extremely bright people. And they've got access to very, very good traders. And they also have unlimited deep pockets. And their mandate is to manipulate the markets to prevent a 1987 style stock market crash. That is what the group was created for, was to mess with the financial markets. And my guess is that they were meeting all through the weekend and probably all day today. But if you take a look at the markets, when you take a look at the Dow Jones Industrials, we went down to the February 2014 low. So almost a year and a half of gains have been wiped out in just a couple of days. But it fell to that low and then bounced right on that support line. However, the S&P didn't really go down to what I would consider any major support line before it bounced. So there might be a little bit more of this crash yet to come. But what I see is that I believe this will bounce. It'll go back up a bit, and then it'll do a slower rollover in the coming month or so, a couple of months, and then continue the crash. And what's interesting is that today, like right now, let me get a chart up in front of me. The S&P is down almost 4%. The Dow Jones is down 3.5%. The NASDAQ is down almost 4%. Crude oil is down 5.78%, so almost 6% for the day. It's at 38.12. And I don't see a whole lot of support on crude until it gets down to around 30. Gold, amazingly enough, is down, and I'll talk about that in a moment. And the US dollar is down 1.4% for the day. This is the world's major currency. Suddenly down 1.4% for the day. You know, gold was up this morning. Right now it's a little bit down. It's almost 0.5%, 0.46. But in the last crisis, 2008, there was a very different dynamic going on. Gold had been rising from the year 2001 until 2008 and had attracted a lot of professionals and a lot of day traders and such. And there was a lot of gold in their portfolios. Day traders will usually hold something like GLD, or they'll hold futures or options on gold, and something that's extremely liquid and easy to buy and sell in a heartbeat. When all the stocks started plunging in 2008, margin calls went out. If you're leveraged and you're borrowing money from your broker to buy more stocks, that's called using margin. And if your equity, the amount that your stocks are worth, drops below a certain percentage, the amount of your stocks that you own, that you've paid for, if that drops below a certain percentage, then you get a margin call. And you have to cough up the difference, and you have to do it within 24 hours. When people get margin call, it causes further liquidation. They have to get liquid. And you know, they in those trading programs, you can designate a set of keys, the control escape, and that might give you a pop-up box that says, are you sure you want to liquidate your entire portfolio? And you can just say yes. And suddenly it sells everything. So even though during the last market crash gold should have been going up, it headed south along with the rest of the stock market. However, it turned around in October and started rising, where the general stock market continued crashing until March of the following year. And I expect a little bit of this time. However, we have now been in a bear market for gold for 3 years. And there's been a lot of capitulation. So there aren't as many people that have gold in their trading accounts. A lot of them have given up on it. And so I expect a little bit of downward pressure on gold from the general stock market dragging it down, but not nearly what we saw in 2008. And what I do know is that there are gold manipulation theories that are tinfoil hat theories, but there is also plenty of gold manipulation where it's a proven fact, where there's analysis on it that is very conclusive, that shows that gold and silver are manipulated markets, which is a good thing for a gold investor because you're getting it at a suppressed price, and all manipulations end. They always lose control. And the manipulation causes whatever they're manipulating to bounce much further in the opposite direction eventually. So gold prices and silver prices should go far higher than they would have without the manipulation. But what happened in 2008 is the spot price of gold and silver were falling, except the demand for physical, because of the panic out of portfolio assets that are in the stock market into physical gold and silver that you can actually hold. That panic caused tremendous shortages, and it caused spreads to explode to where the spot price went down, but certain items like silver eagles, for instance, didn't really go down. They actually stayed the same or went up. Depended on the day that you bought them and who you were buying them from. Some dealers had decent prices. Others were trying to seek a market equilibrium where they wouldn't run out. They'd still have some for sale. So shortages developed. I expect the exact same thing to happen this time, but it's all going to happen with a twist. History doesn't exactly repeat it, but it rhymes really well. And so we're going to see some of history repeat, or at least rhyme, with like the 2008 market crash. But there's going to be some differences here. the position of a lot of people over the past 3 years have given up on gold and silver. So you don't have quite as many people in it, and the positions aren't as big. So that's going to have a big effect on whatever the outcome is on the price. For our insiders and Wealth Cycles members, we're going to have more in-depth analysis on this and try and see where things are going. I just know that for quite a few years, I have been predicting a big deflation before we go into any big inflation or hyperinflation. And that appears to be what is playing out now. It's rare to see a day like this where the markets are down, commodities are all down, and the dollar is down. It is like there is no place to go, no place to hide. So that's it until next time. Thanks a lot. We'll see you later.